Hey guys, Dave Keller here with Market Misbehavior. When I'm interviewing people, I love to ask them what their one chart is. And that it means if you had one chart, just one chart besides the regular chart of the S&P 500 that would help you get a good read on the overall market environment, what would it be and why? So today I wanted to share with you my one chart. It's a chart of the S&P 500, but it includes breadth indicators at the bottom. So here is the S&P 500 closing basis with the 50 and 200-day moving averages. Below there, I am looking at breadth in the form of the cumulative advanced decline line for the S&P 500 at the top, then the New York Stock Exchange, the mid-cap index, and the small-cap index. This is part of my normal weekly review process to look at these cumulative advanced decline lines. And what I'm noticing right now is all four of them have made new highs again this week. Now, what's happened a number of times, and what happened in the first couple weeks, in the most recent couple of weeks, is you had higher highs in the S&P 500 here. You had the New York Stock Exchange maybe a little more flat, but then you can see how in a couple of weeks ago, you had the mid-cap index and the small-cap index actually sloping downward. So that meant while the cumulative advanced decline line, while the overall breadth measurement in the broader, the large and mid-cap space was getting stronger, the breadth in the mid-cap and small-cap stocks was actually lessening, was not confirming that uptrend. There was a bit of a potential divergence there, which didn't feel great. What's happened, though, in the last week is they have all resolved to the upside. So the S&P 500 advanced decline line has continued higher, but also the S&P mid-cap index and the S&P small-cap index, all of their breadth lines have also confirmed that upside. So these are all color-coded green because the trend remains positive. The reason why this is my one chart is because at some point, you will start to see some weakness in breadth. And as if you look back in September of last year, you tend to get weaker breadth, a weaker advanced decline line, and small and mid cap space, because that's a little more speculative when people will take their foot off the accelerator of their positions. You'll start to see it more in small and mid caps before you'll see it in large caps. So this is a key chart to watch because I'm waiting to see when those lines turn downward. But at this point, second week in January, they remain overwhelmingly positive. If this sort of thinking about investor behavior, decision-making, and routines is of interest to you, I hope you'll hit subscribe, hit the little bell to get notifications of my new videos, and also check out some of the other videos on my Market Misbehavior channel. Thanks so much.